all of these people resigned in one day, causing tremendous disruption in China.
Essentially, this chip ban, one of the things it does is it handicaps their military.
For a long time, that was the main catastrophe scenario. Well, wait, just wait till the China sells the treasury.
All right, welcome everybody. Another episode of Investing Counterpoint, our weekly show about the markets. And today, Daniel, we have a pretty exciting show. I have a feeling based on our previous conversation here, it's going to go a little all over the place, but the main idea behind it is the ban on the China chip sector. So, kind of big news that I feel like it's gone under the radar a little bit in the industry.
Yeah,
here.
It's shocking that not more people talk about it, right? It's quite shocking because this is a very serious blow. For those of you who don't know, Biden administration issued sanctions on the Chinese microchip industry. Those sanctions include prohibition of sales of equipment, advanced equipment, and machinery from US, but also from Europe. In other words, European organizations that try to sell to China advanced microchip production equipment and so on, they face the wrath of US. But in addition to that, any US citizen or a green card holder, permanent resident of the United States, cannot work anymore for Chinese chip industry. They have to resign or they face something. I don't know. Revocation.
Oh, they lose their passport. They lose their passport. They lose their green card.
Yeah, and you have to understand that China is not as advanced as people think it is. Yes, it's a formidable industrial power. Yes, they've gone very, very far. But as far as the most advanced technology, they're not there yet. First of all, they don't produce all of the equipment needed. Secondly, many of the key roles are played by U.S. citizens. And those U.S. citizens are not just, some of them are just Chinese people who became U.S. green card holders or U.S. citizens. So all of these people resigned in one day, causing tremendous disruption in China.
Yeah. It was big, and I'm surprised it didn't get more coverage because from what I've read and watched, and not on the mainstream, CNN, Bloomberg, New York Times, whatever channels you watch, not on those channels, but on some of these, focus on Asia type of channels. It's a pretty devastating blow to the Chinese semiconductor industry. And you have an important point there that I think also went a little bit unnoticed in terms of what does all this mean. It's really the advanced chips, and you said that in your intro, but it's really the advanced technology. So the things that are going to affect high-end military capabilities, AI, artificial intelligence type of technology. So these really supercomputing type of applications are going to be the ones that are most effective and affected. And Alibaba apparently just ordered, I forget how much it was, but they're opening their data center, their cloud data center is completely reliant on these things. So it's a big question about how that's going to be able to, continue to evolve as times go on. So it's already being felt in China.
And it couldn't come at a worse time. I mean, a few episodes back, for those of you who subscribe to the channel, you've seen we did a whole episode on Chinese data, macro data, which was not very good only a couple of months ago. So against that backdrop, since that episode that we did, Yuan continued, the Chinese currency continued to lose ground. If you look at the chart, I mean, at first it doesn't seem so crazy. I mean, it lost a few percent in the last month. Overall, it lost about 12% in the last few months. But you have to understand that for China, typically Yuan was a currency that they wanted to depreciate, that they've tried to actually depreciate. They were even labeled the currency manipulator to try to depreciate Yuan and sell their goods cheaper. But now the situation's reversed because of the bad data and so on. The rise of the dollar through the Fed raising interest rates is causing all kinds of problems for China because the stuff they buy from outside is getting more and more expensive. And Yuan has been dropping. And in fact, we find Chinese government intervening in the currency markets to try to stop the slide of Yuan because China now is starting to experience inflation, which is something they haven't seen for a long time. And what's unusual, though, I will say this, is that the way Chinese government apparently has gone about this currency manipulation. I shouldn't say manipulation. That's kind of a pejorative term. I mean, that's a normal thing. Governments do enter currency markets to stabilize currencies. So what they did was they actually used a very unusual mechanism, Yuan, to support the yuan. Typically, you would think China would use their reserves. They have 3 trillion highest reserves in the world. They have lots of gold, treasuries, euro bonds, and all this stuff, and they could just sell it very easily. Now, if they sold treasuries, that would have a severe impact on the United States, right?
That's
because then the rates would continue rising, the interest rate payments would continue to rise.
That's been a huge fear, right? I mean, that's been something that's been out there. They've had this reserve for a long time.
That's been the main kind of, for a long time, that was the main catastrophe scenario. Well, just wait till the China sells the treasury.
Right, exactly. Yeah.
But this is, so they come to a time where they need dollars. And what do? They don't sell any treasuries. It's a shock to me. They go ahead and they instruct banks, private, well, nothing in China is quite private. It's semi. So they instruct private banks to use currency forward contracts to obtain dollars and bet against the dollar or for yuan. To me, this is unfathomable because you're really taking on a major risk in your corporate banking system that is already under stress. Right? We talked about the previous video that there are a lot of bad real estate loans in China. I mean, just look at the videos of these ghost towns, right? There are amazing high-rise ghost towns that have been built but malinvested, shall I say, using the Austrian economics terminology. So they have a lot of bad loans on the books that they haven't recognized yet. They have bad macro data. And at the same time, they're essentially forcing their banks to play casino with the dollar, something that they have no control over. And they have zero control over the direction of the dollar. Yeah, Jerome Powell, with one press conference, could now severely hurt their banking system. I don't know why they're doing this. Unless the only thing I'm thinking of is it's some sort of arrangement that they agreed that somehow they agreed to this. But then, so they want go ahead and the currency markets, they intervene, but in a way that doesn't upset United States. What does United States do? It hits them right in the solar plexus with the chip sanctions. So to me, I'm not quite understanding what's going on, but it's a very strange sequence of events, Yuan.
Well, from what I've read, it wasn't completely a surprise to the Chinese government. And we're going to talk about, the idea that the Chinese government has been pretty quiet about this, as far as I can tell. There hasn't been, I mean, this came out over a week ago now. These sanctions were announced. And there hasn't been any major policy shift or retaliation in policy from the Chinese government. And I think people are waiting or thinking about, this won't go unanswered. I mean, unless, like you said, there's some sort of arrangement where this isn't as bad as what we think it is. I mean, this can't go unanswered. I mean, it really does. It's a big move. It really handicaps China's, technology.
But it also puts further pressure on yuan, because a lot of this technology they then go ahead and export. So whatever they don't export, they have less currency coming in, other currencies, and then their yuan will keep dropping. There is a political backdrop, right? We can't ignore that, though neither you or I think we fathom ourselves as political experts, but there is a backdrop. There was a major gathering of the Communist Party, like one of their major events. Xi Jinping, he came out and gave a big speech. What's interesting about the speech? He never mentioned the United States. It's very strange. How can you talk about, the world events now and not mention US? He did not. What he did talk about, that in China, there's a zero policy. I'm not going to say the word zero for what, because YouTube, I don't think, doesn't like that word. We live in a very strange time. But basically, they're trying to avoid the flu with severe draconian measures. And so Xi Jinping was under pressure from within Chinese Communist Party and all of society to stop that. He came out and said, no, it's a highly unpopular policy. at a time when he's somewhat vulnerable.
Yeah.
He vowed to continue it. And there are some news I read, very interesting news today. South Morning China Post is one of the newspapers, again, state newspaper, just like everything else, announced that there's a big Apple iPhone factory, that there were 300,000 people working, and they found some case of some, let's say, disease, right? Whatever it is. And this factory is in a special state now. Now, what is that state? It continues production for now, but the workers cannot eat together, cannot socialize. They have to be in their dorms or their workplace. They cannot leave, and they cannot see their family members, even children.
No.
You know, I think this should no longer technically be called a factory. There are other names,
Right.
for this kind of working arrangements, like a work camp, and not like a Boy Scout camp, some other type of
Where you
camp.
go away, you swim in the lake and you work a little bit. You learn
Yeah,
some good skills.
so there's this arrangement, and I'm laughing, because I don't want to cry, and it's obviously not a happy situation, but this Apple factory, 300,000 people are now not able to socialize, not able to see their families, continue to produce these, socially responsible iPhones, I guess. And South Morning China Post announced that this policy is going to be spreading across China.
No.
So this will inevitably cause Chinese production to slow down. Inevitably. Those combination of things, right? We have a microchip ban. At the same time, we have all these kinds of restrictions coming back, which we thought are gone now. And with that backdrop, Chinese banks are now taking on US dollar debt. The worst thing you can be doing right now, unless you are sure that the dollar is going to drop, right? If you knew for sure, but I doubt they know for sure anything of the sort, right?
One of the things too about this, these chips, and I don't think people realize, because we always think of China as a manufacturer of all the electronic equipment, but they are a net importer of chips. They only produce about 15% of the chips that they use, according to one thing that I saw, and they import 75% of them. So where do these come from? Places like Taiwan Semiconductor, right across the strait there. That's the biggest
US,
chip producer.
US.
Oh yeah, absolutely. We don't produce a ton of them either. We're behind. Taiwan Semiconductor is the big player in this, and it's depending on which government you're part of, it's either part of China with the One China policy, or it's independent. And
it's almost like they're nudging China to take some action on Taiwan, because if this continues, you would think that it's almost impossible for China to resist trying to take over Taiwan, because it solves their biggest problem.
Exactly. And not only does it solve their biggest problem, it causes a world of hurt for the rest of the world. We can't, even the US cannot, I don't believe they can, I don't know, but I don't think that they can replace Taiwan Semiconductor in terms of like that manufacturing. They're the most advanced, or at least amongst the most advanced. They produce about half the advanced chips in the world. It would be very, very difficult to lose that to China, and then your whole chip ban is null and void. So you're right, it is almost a dare, and that's one of the things that I wrote about this back in March. When the Ukraine invasion happened, what would happen if China invaded Taiwan? Because there were, there's always some saber rattling going on there, right? Like boats in the straits or ships, flyovers, all and talk. But it's been quiet. And so one of the questions was, what if China saw this as an opportunity to invade Taiwan because they think the world's, focused over here, whatever. That obviously hasn't happened, but now does it become more of a possibility in your mind that there could be something?
I'll have to put on my historian hat now and the cultural hat. I think people misunderstand. I do not believe China will ever do that, because people have to understand what China's history is. It's a completely non-militant society of that kind. And China, if you look at World War II, for example, China was at war with Japan for many years, yet it did not undertake a single offensive operation during that time. Sometimes it defended it effectively, sometimes it did not. But in China's mindset, there's no such thing as offensive war. You look at or even civil wars that were fought, right? There was the Chiang Kai-shek against Mao, but that was a very strange one. But still, I mean, that was mostly decided by outside powers. There were other civil wars that were fought in 19th century in China. There were civil wars between warlords, but even almost all of them, there were no effective offensive operations, because I think Chinese mentality, and I may be wrong here, but there's not a precedent for them wanting to go on the offensive. I think the mentality of the Chinese society, they're very hardworking, they're extremely persistent, but they're not adventurous in that military way. So I really don't believe, unless this chip ban is meant to dare them and to force them to do it, but I really don't believe they will. I don't think it's in their mentality. I think they're also realistically understanding that it's not going to happen.
But they have this massive military right now. I mean, it's massive, it's huge, and they, essentially, this chip ban, one of the things it does is it handicaps their military. So I think that China could make a case that this would not be an offensive, undertaking to go, re-annex Taiwan by force. It would be a defensive undertaking because, we're coming directly after their military capabilities with this, because the military industrial complex is one of the places where it is very, very, you're going to be hit very hard with this chip ban. So, I mean, again, neither you nor I nor anybody else out there, is going to be able to determine if or when or how China is going to, invade Taiwan. I think that is such a, it is a risk scenario, but I think the likelihood of it is impossible to gauge by, certainly by you and I.
I think that historical analysis shows that it's much less likely than people believe. They see a large military, they think it actually means a whole lot when it doesn't. I mean, China's military is massive in World War II.
Yeah.
Massive. I mean, it had 400 million people even back then. And yet it was not a major fighting force at the time. Now, of course, there were societal reasons and so on. Right now, society is much more coherent in China, right? I think 100 years ago, you could say that most people in China didn't even know the word China. I mean, they didn't know they were part of this thing called China. There was a lot of traditional kind of societies, mini societies and mini cultures. Now it's a lot more cohesive. So who knows, right? You never say never, but I don't think it's going to happen. I do say that from my standpoint as a risk manager, remember our show is for you people who care about risk management, financial advisors and others. Don't forget to subscribe to the channel. I'm being reminded, there's a bell, subscribe and comment under the videos. But from a risk management standpoint, I would say that the risk in Chinese assets is becoming very, very high. I'm not saying, remember, we talked about risk management is not a prediction. I'm not here predicting that China will go down. Who knows? It could very well go up dramatically. The dollar could go down. It could be because currencies a lot of the time are mean reverting, right? The dollar's been shooting up. Maybe it will go down. But at the same time, I will say that no matter what you think, the risk in the Chinese investments is probably at an all-time high. Well, their currency is an all-time low. It's the lowest point, I think, was 08 or 07. That's where Yuan is right now. So, and the thing is the trend. It's important. The trend is already downward. When the U.S. introduces chip sanctions, that is already on top of some very, very tough trends. And I want to show you a quick stress test. That portfolio crash testing is a tool that we created for financial advisors to be able to get a sense of risks. Here I have a portfolio, which is a moderate portfolio. You can see that it's got balanced assets and so on. It's kind of like a 60-40. It's very well diversified. Not so much globally, but a little bit globally. And you see we create these stress tests, different kinds of scenarios like inflation or Fed hikes rates. We have this scenario actually called Chinese corporate debt implodes. And that, I'm not saying it will implode. I'm not. But if you're considering, if your portfolios or portfolios of your clients now heavy Chinese exposure to China, you should consider corporate debt problems, not just because they're buying forwards on dollars to support yuan, which in itself is actually quite mind-boggling.
Mhm.
Also because there's huge problems with real estate. We all know that lots of real estate loans are just sitting there. They're not written off, but they're in fact not performing. So China corporate debt implodes. If I choose this scenario for this moderate portfolio, we see a 17% loss. In this case, $100, 100%. So it's same. So it's a 17% loss from China in a portfolio that holds no Chinese investments, to the best of my.
No, not directly.
Right. It doesn't, right? It doesn't. So just because you don't hold investments in China does not mean you will not be affected. I mean, 17%, of course, is not a world-ending loss. But what I would encourage you to do is consider which of your investments have more exposure to overseas markets, particularly China and Europe. We already talked about Europe a couple episodes back. You really need to understand that if you are to keep those investments, there's a price you pay. Risk is like a cost. It's like a transaction cost or any other cost. You pay risk in order to reap reward. So the question for you becomes, as the situation in China changes, and that's what we're here for, to tell you about some of these things, is it worth the risk? You need to re-examine, are those investments providing enough alpha for you, or beta, depending on what you're doing in a portfolio, to warrant keeping them? Or do you want some investments that are much less exposed to the world outside of the United States, which looks to be less risky right now?
Yeah, I mean, it's this is the exercise to kind of go through, whether it's for your own portfolio or with your clients. But as these things come out in the news, what are the, and this is what we do with this show, right? Like, what are the outcomes? What are the potential outcomes? What are the potential? This is why we started talking about what are the retaliations, because if there's no retaliation, I'm not sure that this is a big risk event. I mean, I do think that there's things that are going to get more expensive because China can't have these ships. These ships come over. We're going to need to do the supply chain a little bit. There's things that there's like some talk about which the elements used to produce these chips. The silicon, the what was it, boron or borium, lithium, like all these kinds of other elements, which some are plentiful, some are not. But even those pieces can eventually seep into this equation where there's other reasons why these things can get expensive, even without a direct retaliation from China. But
the whole point is that it's already coming at a bad time. I mean, we already have so many sanctions on various commodities involved. It's a very fragile economy right now, and these things are just like, you never know which one of these things will be the detonator.
Right. I mean, and the other side of this too is that there is some opportunity, because wherever there's a risk like this, or wherever there's a potential difficult situation like this chip ban, there's opportunity too, because I mean, these U.S. companies aren't going to be like, oh well, we can't get chips anymore. Now what do we do? I mean, there's already a big Intel factory going up, I think, in Ohio, which is going to take years, from what I know. But it's part of that drive to bring some of this manufacturing back to the United States, back to Europe. I mean, even the company in the Netherlands, AMSL, which is one of the big producers, is going to be pressured not to sell to China. So they're going to have to find other ways to increase that. So where do the factories come in? Where does the growth come? So there is opportunity here too.
Yeah. Also, what companies in the U.S. produce goods that would no longer be imported from China, because just China doesn't have enough chips for them? What more advanced electronics does China export that can be produced by other companies in the US and they can fill that void, right? That's another idea to think about. But we'll continue this discussion, I'm sure, because China is an inexhaustible topic. It's an amazing civilization that thousands of years old. And I'm actually very fond of it. But looking at the stress test, we see that there's a significant impact even to a moderate US-based portfolio from Chinese corporate debt. By the way, Yuan, we agreed that from this episode on until Thanksgiving, for anybody who comments 3 times, makes 3 comments under any videos on the Investing Counterpoint channel, we're going to give you portfolio crash testing, this tool that's actually used by top institutions and advisors, for 3 months for free. That's an amazing deal. So if you have something to say, please comment and you'll get a trial, 3-month free. It's not even a trial. 3 months is more than a trial. 3-month use of the application. I would only say that if you comment only with emojis, like a smiling face, that doesn't count. There has to be a coherent
just say something.
sentence. Yeah, say something. So please comment, subscribe to the channel. We're going to be bringing you information every week, give you a different point of view. That's why it's called Counterpoint. In fact, it's a different point of view, right?
Yeah, absolutely. And you know, I think we showed that a little bit today. Even though we agree on a lot of things, we can also disagree, which can be a counterpoint to each other. We can also have counterpoints to the prevailing market trends. But absolutely, one of the things that I think that the other thing that you could put in the comments too, if you'd like, are ideas for episodes, things that you want us to talk about, things that you're thinking about. You know, one of the places where I do think there could be a benefit here to, you know, as far as a country benefit, could be India. You know, India just started manufacturing iPhones almost as well as China. So there could be a big ramp up in India, and we can talk about that in an episode if there's interest in that. So please tell us what you're interested in, because this show is ultimately about helping you and your portfolios and understanding the risks that a portfolio faces.
Yeah, or what type of portfolio you want to run through a crash test. Or we have this moderate portfolio. Maybe you want to try another one. But again, you comment and you'll get access to the tool. And stay with us. We're going to do this every week, dedicate ourselves to it to bring you the valuable content that will help you manage risks better.
Absolutely.
See you next time.
All right, everybody. See you next time.